What if cutting your tax bill is only half the job and the real win was what you did with the money you kept? If you're a U.S. business owner paying serious money to the IRS every year, tax savings alone is not the end goal. The real goal is to turn those tax savings into something that actually changes your life. This show is where we legally shrink your tax bill and keep more cash in your business. I'm Chris Middleton from MakeTaxesFair.com. Today we're breaking down the accumulation of wealth pillar of the Clear Edge framework and why the tax strategy is not just about paying less, it's about building with more intent. So stick with me to the end and you'll walk away with an understanding of how smart tax planning can create fuel for long-term wealth and why too many business owners save money on taxes only to let those savings just disappear. Accumulation of wealth is the A in the Clear Edge framework, and this pillar matters because tax savings are only powerful if that money gets redirected with purpose. A lot of business owners work hard to reduce taxes, and then the money they save just gets absorbed back into life, right? Random expenses, lifestyle creep, it kind of just got spent, right? That's a missed opportunity. The superpower of legitimate tax strategy implementation is creating extra cash flow. Instead of giving that money to the government, you get to keep it. Once that cash flow exists, you have a choice. You can let it evaporate or you can turn it into long-term wealth. The accumulation of wealth pillar is about making sure tax savings become assets, investments, reserves, and real financial strength instead of a temporary win. Here's the big idea, right? Tax savings should not just reduce pain, they should create progress. If you save $10, $20, $50,000 in taxes or more and do nothing intentional with it, is that a bad thing? Well, probably not. Feels like you won the battle, you didn't send a huge amount to the government, but what really changed in the bigger picture? The accumulation of wealth pillar is about asking better questions, such as, what am I doing with the money I fought so hard to keep? Once you think this way, tax planning stops becoming just defense, it becomes offense. You're not just protecting your profits, you're turning those profits into something bigger. At a high level, this pillar looks at how tax savings can be redirected towards things like cash reserves, debt reduction, investment accounts, retirement funding, real estate investment, reinvestment in your business, asset protection, those kind of planning-minded things. The point is this, if there's no intentional plan for savings, the savings will usually just vanish, whether it's $5,000 or $50,000. This concept gets missed for a few reasons. Most tax conversations stop at the return. How much do we save or how much do we owe? Many business owners live in that constant financial pressure cooker, so extra cash just gets greedily swallowed up by the business by default. If nobody ever pauses to show you as a business owner how tax strategy and wealth strategy connect, you as a business owner will get caught in that trap of treating these as two separate topics. They shouldn't be separate. Tax strategy creates margin, breathing room. Wealth strategy decides what that margin becomes. Now, this is a good time for a quick note. We are tax advisors that make taxes fair, and our sandbox is to help business owners pay less in taxes legally, ethically, and morally. We are not financial advisors and do not provide investment advice. We do team up with either your financial advisor or have an amazing team of people that we have had great experiences in the past that we can refer you to. But the actual deployment of your money to specific investments, that's not what we do for our clients. So with that in mind, let me share a couple of examples. A business owner saves $30,000 in taxes through proactive planning. If that $30,000 just gets absorbed into random spending, the long-term impact is small. But if that same $30,000 is redirected intentionally, it can start to do some real work. It might become a reserve or true reserve fund, down payment on investment, capital to eliminate high interest debt, retirement contributions, hiring your kids, funding their Roth, equipment that expands capacity and creates an opportunity for depreciation, or life insurance to protect their family and possibly create an investment if it's a cash value type thing. Now, the tax saving strategy has a second job. It's not just about the money you keep, it's about the money you deployed. And that's the shift that this pillar creates. The accumulation of wealth pillar connects closely to other Clear Edge framework pillars like credits and deduction optimization, which help create the savings, legal structure, which affect how much you keep, retirement planning, a common place to deploy the savings, exit planning, what long-term wealth eventually looks like, and efficiency, ultimately creating systems that are repeatable. This pillar is the bridge between reducing taxes and building a strong financial future. Common mistakes that we see are business owners only focusing on the tax reduction with no plan for the freed up dollars, letting the tax savings disappear into lifestyle inflation, treating wealth building as something I'll handle later, treating every extra dollar as spendable instead of strategic, and failing to consider planning with the broader financial conversation. You may still save money, you just won't create as long-term of an impact. So two business owners that each save $25,000, right? One business owner is really excited and hey, that money gets spent on their life and business. They enjoy it for a few months. Other business owner saves the same 25 but has a plan. So they say, hey, that 25,000 in savings, I'm going to allocate to cash reserves, 25% to debt reduction, 30% to investment accounts, and guess what? 20% that lifestyle inflation. They went on a family vacation. Same savings, different outcome. That's what the accumulation of wealth pillar in action looks like. It requires a mindset shift, right? Instead of saying, great, I paid less, you should say, great, what is this money going to do for me? The goal, again, is not just to keep more of what you earn. The goal is to use what you keep to create options for freedom, resilience, and long-term stability and wealth. Now, tax strategy changes more than just this year's return. It should change your future. And tax savings is not the finish line. It's the starting point. And so the accumulation of wealth pillar is about making sure that the money you keep through proactive planning gets redirected into something meaningful instead of quietly disappearing. There is no perfect wealth move for everyone. No two people are alike, and no two people have the same goals. But everybody should ask, when I save money on taxes, where is that money going to go? Once you answer that, tax strategy becomes bigger than compliance. It becomes a tool to build the financial future that you actually want. So the next time you save money on taxes, don't just celebrate that you won the battle with the tax reduction. Ask, how can I turn these tax savings into long-term wealth? How is that part of my bigger strategy? That's where the bigger, better strategy starts. That's where bigger, better financial decisions start. And that's how you start making the moves to not just win the battle, but win the bigger war that's trying to destroy your bank account and your net worth. If this episode helped you even in a small way to see how tax savings could become a wealth saving tool, wealth building tool, don't just nod and move on. That's how money continues to slip through your fingers and exit your bank account. Go to maketaxesfair.com/podcast to get the show notes and the free resource for this episode. We put together a guide with some key questions that you should ask your financial planner if you have one, or ask a new person if you're on the hunt for someone to help you. As I said earlier, we are not financial advisors, and the accumulation of wealth conversation is best had when you have active engagement with a proactive team that helps you to save money on taxes and then deploy those inner resources to secure a more confident financial future. The last thing I'll leave you with is this. The conversation around future planning and wealth building is the most productive when you have goals and what I like to call goal clarity. When you have goal clarity, then the action is easier to take because the path for what you want to accomplish is more clear. So take some action now. Go to maketaxesfair.com/podcast for that resource. We put it together because friends don't let friends overpay the government. If you found today's episode helpful, please share this with a friend. I am Chris Middleton. Thank you for being here, and I'll see you in the next episode.